reached day 3 of Landlord Talking Points, powered by Ideal Flatmate, and all this week I'm being joined by my guest, Ideal Flatmate co-founder Tom Gatzen. And Tom, well, we've reached day 3 and we're in London, so let's talk about Brexit and the London property market, because you know, we're recording this just after we've heard the European election results, and we've seen a big swing to the Brexit party. In a way, I think that's starting to give some clarity because we've had so much confusion, and you know, landlords don't like uncertainty.
Yeah, well, unfortunately, I think it's still going to be quite confusing for quite a long period of time, to be fair. Because we've got this Tory leadership contest now. I think they're going to be all fighting over who can be the hardest on Brexit, and then who knows what's going to happen in the lead up to October 31st. I feel that potentially there could be another cliff edge. We could even be asking for more time because we can't get our house in order. But I think everyone, like you say, wants the certainty. I think people want to see us leave the EU now in the majority. You know, it's what was voted for 3 years ago, and you've got Nigel now coming back and trying to push it through. So hopefully the new Tory leader is a bit stronger on the issue than the last one, and can kind of drive home the referendum result on what was voted on a few years ago. In terms of the London market, we've definitely seen a decrease in immigration from Europe. So a lot of room sharing agents and landlords operating HMOs have seen a bit of a drop in inquiries and people coming through. But you know, London's such a fast growing city, and there's almost an over demand, and there has been in the last few years while immigration's been so high, that it's almost a bit of a correction at this stage. So the market is still growing very fast here, and Brexit's not having, although it's having a slight impact, it's not really damaging room sharing agents at this stage.
I think it's interesting when you look across the London skyline how many cranes there are and how many huge towers and buildings are going up, and that seems, you know, it's literally going on night and day around the clock, and that to me suggests that the investors and the big developers, they have faith in the London property market, you know, beyond the B word.
Well, I mean, we touched on it yesterday, but a lot of the growth has been spurred by the build-to-rent market. One large developer that we're working with, Canary Wharf Group, they actually had a huge hotel being built in Canary Wharf, and they switched it last year to build-to-rent, and that's a 30-floor development. So, as you say, people are kind of not really pushing out of London; they're just maybe changing their focus. So, where there's a lot of properties that are being developed for the sellers market, now a lot of that shifting to the rental market as they see renting growing and continuing to grow in London. There was a really interesting report out by I think it was Savills or Knight Frank, I get that right, a couple of days ago, saying how sharing continues to grow in the city of London. So whereas 18% of renters were sharing 3 years ago, it's now at 27%, and that's a trend that we kind of see continuing to grow over the next few years. And in London in particular, you've still got a large student population, and as the students, you know, merge into the kind of the job market, a lot of them are sharing for far longer.
Indeed, and I think, you know, from the landlord perspective, what I always say about London is that it has one thing that will never change, and that is Greenwich Mean Time, which means that London is open for business when both sides of the world are open and trading. It will, in my humble opinion, remain a major financial hub. And it's such a wonderful city that so many people want to come and live and work and develop careers in London. As you say, I can't see tenant demand dropping. You know, maybe as you say, it will go more towards the sharing side of things. But you know, if you buy a good quality, you know, flats do actually work well in London. Say a good quality 1 or 2 bed flat within a 5-minute walk of a tube station. You know, you're going to struggle to go wrong.
Yeah, and you always see new areas kind of changing, gentrifying and shifting. I mean, we're in Hackney now, probably 10, 15 years ago. Well, actually, a person that worked with us said that he used to work around here 15 years ago, and it was known as Murder Mile. Whereas now it's kind of filled with vegan cafes, and you know, we've got beautiful developments, lovely properties, and just the areas slightly shift, which are better to buy and have got higher quality kind of amenities in the locality. So as you say, the demand for people to live and work in London is never going to change, particularly not probably in our lifetime. And you're right, it's still the centre of Europe. It's still globally right in the centre. You've got GMT down the middle. And actually investments have risen over the last couple of years into the city, not just from a property background, but from a financial background. So there are a lot of kind of scare stories about what might happen if we voted to leave the EU. I think we've seen record growth in the UK in terms of GDP as well over the last few years. So I think people can be confident, and landlords can be positive about investing in the capital.
No, well, I am. Nick and I, we're invested in London. We have a number of 1 and 2 bedroom flats in North London and also East London as well, and they do very well. And our tenants, I think, average have stayed about 4 years, which is fantastic from the landlord perspective. But I think, when there's uncertainty, that can often be a time when you can buy really, really smart and you can buy at a discount. And I think when some people do the numbers, they actually might be quite surprised at the kind of yields that can be achieved for landlords in London, particularly, as you said, in some of the more up and coming areas, zone, say, 3 to 6. I think that's where the opportunity is.
Yeah, I was actually speaking to someone the other day who said exactly that especially in the last 6 months, people have been so reluctant to buy that there's some serious bargains out there. And, sellers have kind of been almost like lapping up any buyer that comes along. So there are definitely opportunities. Maybe because Brexit kind of feels like we're getting a bit closer to it, potentially, as you say, after the European elections, it might start shifting a bit, and obviously summer's coming now. But you're right, for a kind of sophisticated landlord, there's definitely massive opportunities. And London's just expanding the whole time. So as you say, zones 3 to 6 might have been seen as miles out of the city 10, 15 years ago. Now it's kind of seen as very central. So, and that might even go out further. That the places just outside London, places like Watford, Croydon, that are seeing strong growth as well. So yeah, it's definitely a good time to be in the market.
It is, and of course any landlord looking to fill properties in the capital, they've got the ideal flatmate platform to assist them, and London's really your hub, isn't it?
It is. I mean, as we touched on in the previous episode, we've now launched across the UK, but we started in London, and that's still 70% of our properties are in London. And it's the area where we get the most inquiries, it's the most buoyant part of the market. And this is about Brexit, but it's shown that even over the last 6 months, the growth's been absolutely fantastic in terms of people coming to London. So, if you stick your property on our site, you're guaranteed a pretty strong level of inquiries and interest.
Fantastic. Well, as we close out here, I just thought I'd share my sort of 3 top tips for investing in London. Number 1 is to buy within a 5 to 10 minute walk of a tube station or indeed a bus route. Tenants looking to get around the capital and get to work very quickly. I think number 2, and this probably will chime with you, Tom, to be within a 5-minute walk of a pint of milk. When you come home at night.
Say beer then.
Yeah, and that. But you tenants want those amenities on their doorstep. And I think the third thing I would say is I personally have always favoured gated developments. I think people have a sense of security if there's a gate into the development. Obviously, the service charges might be a little bit more, but I think security is a big factor in a capital city as well.
Brilliant advice. top mark. No, I agree. The gated one's interesting. I live in a gated community as well, and I mean, it does take the weight off your mind in terms of security. You're right. I hadn't probably thought of it like that, but you often hear of issues potentially down the road, but you feel very safe if you're just slightly set back from the road. So it comes at a slight premium potentially, but that's a really good point.
It is. Well, that's our kind of discussion about Brexit and the London property market. Tomorrow, in Landlord Talking Points, we are going to move on to probably the topic that's engaged landlords most in living memory, and that is the abolition of Section 21, and Tom's going to be joining me for that, sharing his views for that. We'd like to invite you to subscribe to our YouTube channel, click notifications, and indeed, if you have enjoyed these discussions, please jump across to propertytribes.com. That is where our main content is hosted. So if you're watching on YouTube, it's great to have you on board, but please come and join us at propertytribes.com, and Tom and I will see you tomorrow to talk about Section 21.